Hi, everyone. Welcome back to the Travillian Next podcast. I'm one of your hosts today, Andrew Liesch, head of bank strategy at Travillian. And we also have our head of executive search, Brian Love. And we're excited to celebrate and kick off with you, April being Community Banking Month. We have a great community banker here, CEO Joe Dively from First Mid Bank and Trust. Welcome, Joe.
Hey, glad to be here. Thanks for having me.
Of course. Thanks for joining us. For those of you who don't know First Mid, it's headquartered in Mattoon, Illinois, which is about a 2-hour drive into Illinois from St. Louis. The bank has about $8 billion in assets and puts up great profitability. Core ROA last year of about 135 and an ROTCE of 15.6%. I've known Joe for about 10 years and covered the stock for a bit under the Sandler O'Neill flag many years ago. So right now, I'd just like to kick it off with a few strategy questions, just to help our audience get to know you and the bank a little bit better. And then we'll bring on Brian Love to cover talent and succession planning in a little bit. But Joe, so First Mid obviously mentioned the performance of the bank. Operating environment's been pretty tough over the last few years. You're in very competitive markets. What strategy decisions have mattered the most to you to generate this performance? And is there anything that you can highlight that outsiders might underestimate?
Yeah, I'm not sure there's anything completely unique about First Mid around strategy. Probably the biggest strategic decision that we've made was my first board meeting as chair. And at the time, we were a public company, but traded over the counter. Felt really critical that we needed to grow and grow quicker than markets would afford us organically. So made the decision that we were going to list on the Nasdaq. That was a tough one for our board back in those days. This goes back to 2014. Every board member lived and worked right here in the near Mattoon, and I do appreciate, Andrew, that you said Mattoon instead of Mattoon. Not typical, so I appreciate that. So we made the decision, felt very, very, very fervently that we needed to list. We needed to have a liquidity in our stock if we were going to grow through acquisitions at the pace we needed to. Just feeling really that scale was going to be important, and yet the board was a bit fearful about embracing institutional investment, being public, and could we lose control of the bank? My view has always been and continues to be, hey, we got to earn our independence. It's embedded in our vision statement, and that means performance. And so as long as we perform, and I had just, as you know, Andrew, I was on the board as an independent director for 7 years before joining the executive team. I knew we had a great team and a strong cultural foundation, and I wasn't fearful that we couldn't continue to perform and then also augment that with M&A growth. So that was a big strategic decision for us. I think that as we continue to evolve and grow, and especially through acquisitions, the three crown jewels of First Mid are our low-cost deposit base. And we serve some rural markets. We can gather low-cost deposits and then put them to work in higher growth markets. Second thing was our being headquartered here in Central Illinois, pretty conservative. We're the oldest national bank in the state of Illinois, 1865. Probably not a surprise we're conservative, and that's embedded in our credit culture, and that has served us well through many cycles. We like to share that the last time we missed a dividend was in 79. That's 1879. And so, we've been able to navigate those, all the cycles that we've been through. Our predecessors took us through over the years. And then the final thing is diversified revenue streams. I mean, that creates diversification is a beautiful thing. It's a core part of our strategy, and yet it creates an opportunity for deepening relationships with our clients. And so, not only the bank, but our insurance group and our wealth management team, non-interest income, about 30% of our revenue, which is something that we're very focused on trying to maintain. So maybe I just stop there and see where you want to go.
Yeah, a lot of great things to cover there. So you're at $8 billion in assets. Got the $10 billion hurdle.
With the we closed on the Two Rivers acquisition in Burlington.
Yeah.
We're 9.1.
9.1 now.
So,
Yeah.
9.1, and our assets under management on the wealth side they had about 1.2 billion in assets. So wealth goes up to 7.6 billion. So Again, just it happened last month, but
Yep.
we are closed and now working on conversion.
Right, right. But now that brings the next question. Like $10 billion in assets is even closer. What are you doing to prepare? What does that mean for weighing capital deployment for organic growth? And does it have to be a larger acquisition now? Like, how are you looking at that strategy decision that's going to be coming down the line here soon?
Yeah, a few years ago, we looked at kind of a MOE that was going to take us over 10 billion. There was some merit to it. It certainly got our blood flowing, but as we took a step back, thought strategically, we're just not ready. We didn't really completely understand the implications of crossing 10 billion. So, we engaged outside consultant to help us with that and put together a 3-year plan to be ready. And, again, that's 4 years ago. We're certainly ready. There's expense on our income statement that certainly anticipates going over. We've probably been aggressive as we've done acquisitions to retain expertise that's going to be required when we cross 10. And so, hey, we're certainly ready. It's probably the first question that comes up every time we meet with an investor or an analyst about what's the strategy. I think we've just got to stay consistent and focused on our long-term strategy. We're known as an acquirer, and it's not a time to stretch and do something that maybe creates execution risk. So we're just going to stay the course. Now, I would say over the last 3 years, I've been more intentional about having conversations, building relationships with my counterparts in larger institutions. And if the cultural strategic fit were there, and it happened to be larger, then our last 3 acquisitions have been right at a billion too. That's kind of our bread and butter. If all the other boxes were checked that we look for in an acquisition, larger would be better to absorb the Durbin hit. But we don't think it's something that we ought to stretch outside our strategic focus, and know that if, hey, we did another $2 billion acquisition, that there will be another one behind that. We have a deep pipeline of relationships, and certainly confident that if not now to create that Durbin buffer, it'll be the one that follows. So
Got it.
we're just staying focused on the things that make acquisitions attractive to us, and we can't dictate when people are ready to sell, so we just have to react as those opportunities come our way.
If these deals all being that size, it must be, if it was like a $3 or $4 billion deal, that culture might be a little bit difficult to integrate. 1.2 does seem to be your sweet spot. So I guess with that said, I would like to bring Brian in here to talk about some cultural and M&A questions that he likes to ask folks. So it's like a perfect segue.
I'm really interested in, I do want to get into culture, do want to get into talent, but M&A is something that really kind of intrigues me, because you could talk to some people that'll tell you there's no M&A that ever goes well. Like it's sometimes it's just it's destined for failure. Not saying yours is. It's just very delicate. There's everything from ego to operations to technology to different geographical, segmentations. And you have your culture of your bank. I talk to a lot of people about your bank, and they really think of you as an amazing community banker. Great culture at your bank. How do you keep that pristine as you add in these whole new entities?
Yeah, first of all, I'd say we're premier community bank. I don't know if I'm a premier community banker, but I give credit to our team. I think there's nothing overly unique or that others couldn't do. I think the way we handle M&A serves us well. I mean, let's take Two Rivers, our last acquisition. I've called on them for 12 years. Prior to that, we did the Blackhawk acquisition that got us into southern Wisconsin and northern Illinois, rounding out a footprint hole that we had in the state. Called on them for 10 years. We lent side by side for 10 years. And so, that proves I'm not a closer. That's clear. But the value of that time together, getting to know one another, really trying to understand each other's cultures, I think serves us well, when ultimately I think most community banks, if asked, prefer to remain independent. We get that. Every time I have kind of a first meeting with a bank, I'm clearly sitting in front of them because we admire their organization. And we say, hey, if you want to be independent, how could we tell you that doesn't make sense? But if the day comes, you would look for a strategic partner, I hope we get get a first look and have an opportunity to explore that. And so, I can spend more time on then how do we integrate, but we're really intentional, have been for, well over a decade now, getting out, talking to our counterparts. There may be opportunities that we can work together, lend together, expertise that we may have that we're more than happy to share, and really truly develop a relationship, understanding one another's culture. So if that day comes, we get a call. And for every acquisition we've done, there's been one and a half that we got first look on, but we just didn't see valuation the same way. We can't lose sight. We aren't in it to just grow. We're in it to create shareholder value. And so no harm, no foul. If the way we look at valuation is lower than the seller, that it's their bank, they get to decide. But we do hope that we'll get the first look, and we've been very successful.
Yeah, I think everyone's conditioned to think the closer looks like Gordon Gekko, right? With the
Right.
in the nice suit and the slicked hair. I think the closer in community bank land looks more like you, a good, a community banker that has long-term vision and good relationship, a good rapport with the banks around him. So yeah.
And I think our style, and maybe it's because we realize we're not the smartest people. Good example, Blackhawk. Man, they had a better mortgage operation in some regards than we did. Even though we're the larger institution, we were 7 at the time, and they were 1.2. Hey, we go in to really learn. How do you do things? We just because this is the way we do it, that doesn't mean that's the way it has to be. Now we need to settle on one way to do things. We remind our team, hey, we got to be in listen mode. We ended up adopting their mortgage platform, and their head of mortgage runs all of our customer-facing mortgage lenders. So I just think our bedside manner is a little kinder, gentler, a little softer. We're not trying to pull every nickel from a synergy perspective, given our growth trajectory. If there's talent there, we want to retain it. And right out of the gate, we're in sales mode. You got to re-recruit every year. And when we go up there, we know it's a two-way street on they're evaluating us, and we clearly need to go through an evaluation process as we assess their team.
Well, then that's a great segue. By the way, one last thing I'll say is I consider Iowa overbanked. There's like 300 financial institutions there.
Yeah.
So good luck. I think that's awesome.
And credit unions. Heavier credit union density than
I'm including that. Yeah, I think it's about 300.
You're spot on.
In a state that has what, 3.2 million people.
Right.
Anyway, I think you're going to crush it out there. But
good.
To move things forward, you just talked about recruitment and how you need to retain people consistently. You and I and Andrew had a conversation 6-8 months ago, and I think seated right next to you was your CFO, who also is a hyphenate CRO.
Right.
For a bank your size, that's an interesting in its own right. Yeah. But he's, I think, 10 years younger than me. I'm 47. I think he's in his
young guy.
And I was really astounded to see that. I am a celebrator of younger talent when I see it in this industry. And I like to unpack how it happened. So this is, I want to maybe go down the road of succession planning, because your executive team, I can see some of the ages. It's well positioned to go.
Average age below me is 50. I'm the old guy in the room, and there's only one other. We have 15 members in our executive commit, what we call our executive committee, and there's only 2 of us that are 60 or older. So it's certainly by community bank standards, it's a very young team. Not only the executive team, but our board of directors.
Yeah, well, I want to unpack that. And obviously I was referencing Jordan. I don't mean to sound like this is your life, Joe Dively, but there comes a time in every banker's life where you're either the architect of succession or you're the subject of it, right? So I want to maybe you take me back even like 10 years ago and help me understand how you've kind of paved this road for this moment where your executive team is ready to grab the torch once you
I bragged on the team that I inherited 14 years ago, but maybe a more traditional makeup demographically and age, and over time that's changed out. Mostly due to retirements, but then there's been some strategic decisions made to upgrade the team. I don't know that we go to market Brian, thinking, hey, we've got to find a 30-year-old or a 40-year-old or whatever. But in today's age, we need younger leadership that can connect personally, professionally with our team. They can adapt and deploy new technology. You have a fintech practice. I doubt our fintech competitors are coming at us with what would be a 60 plus age demographic. I just think that younger leader brings attributes that fit in our competitive world. We just spent some time this week talking about AI and with our board and how do we deploy that. And it was clear both from our board members and our team members who were discussing that. Hey, that youth, that openness to new technology, understanding how it makes life simpler for our customers or more efficient for First Mid. I just think that youth has served us well. I also think that when we're recruiting people and they know we, back to our strategy, want to earn our independence, an offer that we can't refuse, hey, we won't. We're fiduciaries at the board level, but hey, we're going to fight like heck to stay independent. I think that hopefully for the people that we've recruited, this is their last stop. And Jordan's a perfect example of that. Not only Jordan, but our chief credit officer, very young. We've been very intentional as we've had openings. We just hired a chief marketing officer. I think we have 4 of our senior team members, that we've recruited intentionally for those who have already crossed over 10 billion, in our footprint, or people that we compete with, people that we respect. But they were number 2 within their respective organization and indoor department. And so we create an opportunity for them to come in and lead their own department, but they bring a skill set, kind of a been there, done that track record, having crossed over or managed in a 10 billion and above. That's been great for us. Our chief information officer, Jordan, is our chief risk officer, and then promoted to that dual role you talked about. Our chief retail banking officer, and as I said, our chief marketing officer, all came from organizations well over, in some cases, 10 billion.
Yeah. Well, I wanted to also ask, and then I'll turn it back over to Andrew. I've just maybe 2 last questions about talent. And I like doing this. We've talked to so many different executives around the country, some running banks that are 50 billion, 100 billion in assets. I like to understand what's not on the resume that you look for, the soft skills. Like one of the CEOs said that they always look for humility and hustle. If you have those 2 things, we can teach you the rest,
And
right?
I
I
tell
love
you,
that. I've adopted that.
I think that's
What's your
great.
2 things?
I've always said energy and effort. When I'm talking to my kids, I always get in front of all of our new hires on a monthly basis and talk, welcome them to the organization, tell our story. But I always am asked, who gets ahead in First Mid? And to me, clearly in some areas you're looking for technical expertise, but that effort and attitude. By attitude I mean a positive energy. Looking at the good things. Where's there an opportunity? And I always say, don't think we don't know who those people are. Who may bring a negative energy, and on the flip side, who are drivers and positive, raise their hand for a new opportunity. Those people are identified relatively quickly through both informal and very formal ways. We look at succession planning, and they're gonna, if they have half a brain, that was always, I had a half a brain. And I think that effort and through a work ethic and attitude are the folks who are going to do very, very well at First Mid.
Well, and that spawned straight from the top, Joe. It's saying a lot about you that those are the 2 things that you're talking about. And I'm sensing a lot of humility from you as well. That's just my take. But
Yeah, I think that's a good thing. Poke fun at yourself. Don't take yourself too serious. Coming into First Mid, it was very easy to be humble. I needed our team far more than they needed me. Not being a traditional banker, I think the board saw some skill sets or experiences or personality that would be good for our bank. So I knew I was bringing something, but in regards to understanding the business like they did, I continue to say, hey, I'm a non-traditional banker. I've got a lot to learn. And one of the key strategies was putting really smart, like-minded folks around the table to help lead.
yeah, the best strategy for an executive to have is hiring those smart minds. It makes you,
Yeah, you bet.
it lifts the whole, all the boats in the harbor. My last
Absolutely.
question before I bring Andrew back in,
Yeah.
kind of takes us back to M&A. The last few years, there was like a desert of M&A. We didn't see a lot. And then last year, the tidal wave, whatever, what have you, it seemed to crest pretty nicely, although it's been a little bit more quiet this year. I think it's coming. It may come back. What that does is always replenish a lot of the talent in the industry. There's people out there looking for jobs because their bank is sold, but it actually makes it harder for banks when there's a talent target and now everyone knows that they're out there.
You
They're
bet.
not passive anymore. So how do you seize upon new talent? And then I also heard you say that every year I'm retaining my people. So I was wondering if you could tell me a little bit about how you feel about M&A and talent, and then how you're buckling down to keep your people happy and develop them.
Yeah, two great questions. That from a talent perspective, every time we meet, as soon as we announce the Two Rivers deal, we give it a couple days, but then we show up to tell our story and start that recruitment process. But at some point, I always ask people, hey, raise your hand if you want to move to Mattoon, Illinois. Over the years, 8 whole bank acquisitions, no one's ever raised their hand that they always wanted to move to Mattoon, but it creates an opportunity for us to talk about the fact that we've embraced a distributed organization. I mean, we have work centers all over our footprint. There's great people that have come through acquisitions, some of them at senior levels, but really throughout the organization. And so, we couldn't replace jobs in Mattoon. There just aren't enough people, the lead time to be up and running and proficient. And so our strategy has always been, less is more regarding, taking jobs out. If there's, everyone has a model, everyone has identified off an org chart, hey, where we think we have duplication and opportunity for cost saves. But every employee in a new organization that we've acquired, we meet with them one-on-one. We all know what they've done, what they'd like to do, what's their background. And part of that is to build goodwill. Even if their job's eliminated, we want them to say, hey, they were good people. They are transparent. They are honest with this. And yet, selfishly, we want to keep the best talent. And every time, every acquisition, who we've retained versus who we thought we would, it changes because, we get to know them on a personal level and what they've done, what they'd like to do. I just think, hey, there's more, I don't know if burden's the right word. There's more time spent to go have those one-on-one meetings with our leadership, meeting theirs, but it's all around that recruitment, enrollment, and coming out with an organization that where 1 + 1 can be 3 or 4 and stronger than we anticipate. We have people from acquired organizations, again, relatively smaller versus First Mid as a whole, that are leading. Our head of digital strategy came from the Blackhawk acquisition, and she's just fantastic and brought a skill set that we didn't anticipate, going into the acquisition.
As you're gaining talent from other banks and as there's bankers on the street, there are chances to upgrade. There's more opportunity maybe out there if things are hot. How do you keep your people to stay put?
Yeah. I think it goes back to the culture and the vision that we have, and that it's something that they bought into. I don't want to ever be nonchalant about that or take our team for granted. I think that we clearly want to pay at market, but people, I think, stay here for the culture, the opportunity to grow, that we're executing on our strategy. That, like I say, several of our leadership made a conscious decision to leave a really large bank to join us, and we're kind of in that. I think it's a beautiful place, both for the bank and for a place to build a career. Hey, we're growing. I only think there's as much opportunity for an individual in growing their career as there is for the organization they're a part of. So I just think but we've got big bank services, big bank technology, and we can compete with anybody. And so we're kind of in that sweet spot, I think, not only for the bank, our investors, but also for our employees to really build a career.
Well, I appreciate that perspective, Joe.
On the M&A topic and growth through deals and the revenue diversification. So when you look at a transaction, is a fee income component a large part of every deal you look at? And then what fee income businesses don't you have right now that might be attractive to you to add through M&A and get scale almost overnight?
Yeah, it's not a must-have, It's certainly a like to have in our model. Two Rivers is a great example. They have 1.2 billion in wealth advisory services there, but they've never exported those across into their higher growth markets. Kind of curious that they haven't. There's a great opportunity to grow that business. Great team in Burlington, really strong team. And so to export those trust and financial advisory services to Des Moines, which we're really excited about. I have a great team there, Iowa City, whether it's there and then we can grow it or we can bring it to market, bring it to bear. Clearly our heads of our wealth and insurance groups know that they're on the clock. We don't have any insurance services or minimal in the Two Rivers footprint. We didn't find that in Blackhawk. So they're on the clock to, whether it's through strategic hires, an agency acquisition, lift outs, what have you, to expand those services. When people, after a couple of years after an acquisition, and they go to our website and they see this full suite of services, we want them to have that available to them regionally. And so, like everybody, one of the most transformational acquisitions for us was Sway Capital. It was a bank headquartered in Decatur. We were already in Decatur, not Decatur, Champaign, Peoria. Not sure that we needed to go deeper there from a bank perspective. We really liked our footprint and our team. But what they had was, we were in the insurance business, and they had a insurance agency that was 2.5 times our size. We were in the farm management business, a piece of our wealth, but they were 4x us. So that was a beautiful thing. I think that we're looking more to grow and expand our existing set of services rather than to jump off into something that we don't know, where we're fully dependent on that new to First Mid team. It certainly would look, just because we're not in it doesn't mean we shouldn't be. Equipment finance, some of those things that you see driving non-interest income for others. But I think we will kind of must stick to the things we know, expand those, but certainly keep an open mind to those other business lines that could keep non-interest income around that 30%. That's a goal.
Last question that I have for you kind of brings back in talent. And look, we've talked about, and one of the things that really attracted us to having you on here is that you have promoted younger talent, you've hired younger talent, younger leaders into the organization. So really, this is the development of the next generation of bankers. But you once benefited from that sort of mentorship and investment in you. So I'm just curious right now, who has had the biggest impact on the early development in your career? Is there anyone that you'd like to thank here today?
Yeah, before I get to that, that's a great question. I do want to, as much as we talk about grabbing outside talent or talent from acquisitions, I do want to say it's a real priority to us. We measure, it's in our strategic plan for internal promotions. I mean, last year we had 125 of our associates get promoted to that next level. And out of 1,200 employees pre Two Rivers, 11% of our employees found a new opportunity to grow. So we have a really focused development plan for leader of others, leader of leaders. It's based on the book around the leadership pipeline. It's a great thing for our internal team. Make sure we have the same vernacular, same expectations, same process for leadership. And then when you think about an acquisition, to bring a new team members in and all kind of get on the same page. That's the internal focus on their development and growth, and not just being reliant on outside talent. There's just a great tension and really complement between bringing in people that bring a different perspective, but then, delivering on the promise of what growth does for our employees by giving them an opportunity to grow their career, however they'd like that to be. So I want to get that in. It's really, really important to us. I guess and this connects to First Mid. In 1991, I came back to our hometown. Both my wife and I were born just down the street. We were living in Boston, and I had the opportunity to go to work for a guy named Dick Lumpkin. Dick is his family had a fourth generation telecommunications company. And so I worked for him for 20 years. And the values that I found at that organization, Consolidated Communications, and here at First Mid, as you would imagine, in Matt Toon, there's just a lot of overlap of people, business relationships, boards, but culturally, this commitment to our employees, to our customers, into the communities that we serve. That we're here to make a difference. Our purpose statement at First Mid is collaborate to make an impact. And really, the approach Dick took, and that I was able to see, he actively mentored me. And honestly, he was the largest shareholder here at the bank. And when we have a mandatory retirement at 70, and he asked me to come on the bank. So it was through that relationship, and I got to witness him for 20 years, how he led. And there's no doubt that was foundational for me. And very, very grateful that one, he hired me at Consolidated back in 91. They drug us home kicking and screaming. And not sure that we wanted to be back here, but it's just been a wonderful thing professionally, personally, and involvement in the community, and then giving me the opportunity to become a part of First Mid, best thing that ever happened to me. So I appreciate that question, so I could talk about Dick Lumpkin.
That's great. Fantastic answer. Brian, any last questions from you?
I have this thing I do at the end of these podcasts. I'm a big movie guy. I just want to hear what Joe Dive's favorite movie is.
God, that's a great question. You should have given that to me earlier, and I would have really thought and had a really good answer that tied this all together. I think Forrest Gump is just a phenomenal story, and I don't know I'll think about and send you an email when something comes back. Others right there, but there's something about Forrest Gump that's special, I think, and that's the first that comes to mind. What's yours, Brian?
Oh, geez, you got to put me on the spot.
Yeah.
I tend to say I got some quirky taste, but I'll say Schindler's List. That's a movie that kind of rocked me a little bit to my core, and I think of it as just an amazing film.
Big gap between those two, but two sensational, iconic movies. Yeah,
both Best Pictures, 1993 and 1994.
Well, look at you.
Yeah, I know that stuff. And banking,
Yeah.
it's movies and banking. That's what's in this brain.
There
But
you
actually,
go.
Forrest Gump is kind of an interesting thing as we look back on our conversation. He's kind of an everyman. Maybe he's even, an underdog. And he basically changes the course of history through his, just being a good person.
Yeah.
Right?
He was
That's kind of an interesting way to think of it.
Special guy who made an impact on a lot of lives. And that's the story throughout. And maybe that is the connection to our careers and the impact we hope to have in people's life. But you just walked away feeling good about humanity.
Yeah.
With that story.
Agreed. That's probably a good stopping point on this conversation. It was great to get to know you. Andrew, if you want to take us out.
Certainly. Joe, always a pleasure to talk with you. Great to hear more about the bank and your strategy and the hiring process over the years. Like Brian said, we were definitely impressed and attracted to the younger leadership that you have there. And that's definitely forward thinking. And I really thank you for the time today. And I always appreciate having you talk with us. Take care.
Hey, anytime you want to talk about First Mid, give me a call.
Yeah, will do.
All right.
All right. Take care. Thanks, guys.
Thank you.
Thanks.